and begin trading to unlock your rewards. You can scan the QR code here on the screen to find out more. Not to worry, we'll show this at the end of the webinar as well in case you want to find out more about our welcome promotion. And just a reminder, the content shared today is strictly for educational purposes and does not constitute as investment advice. As always, trading CFDs carries risks, and if you're ever in doubt, we encourage you to consult an independent financial advisor. And now it's my pleasure to introduce our guest speaker, Desmond Leong. Desmond is the CEO of Rocket and an award-winning trader, well known for his technical analysis and research. His team has been recognized multiple times as finalists for the Technical Analyst Awards in FX and equity research, and today he'll be sharing his view on the Fibonacci Confluence Strategy. Desmond, over to you.
Thank you, Raphael. All right, let's begin today's session. Just doing a quick sound check if everyone's able to hear me, and equally importantly, there is this chat button which might be visible to you. I'm just going to send a message there. Are you all able to see that message? It's either a chat or a question button, right? If you can see the chat button, that'll be great, right? If not, it's also okay. You can use the question button. Can you please test it out? Trouble you guys to test it out to see if you're able to send a message either in the chat or in the question section, right? So I know that there's a way that we can communicate throughout the webinar. All right, I see Ryan, James. Okay, cool. Okay, Harry, Ashvin, William. All right, good stuff. Can see our messages. Perfect. And I see Imran raising his hand. Yep, I can see your hands. Right. I assume that you can't see the chat. Ben. Okay, if you can see the chat, are you able to send messages in the chat? Oh, okay, can send in question, not in chat. Fine, that's fine. There is no way for me to allow anyone to send messages in the chat, it seems. We will use the questions now. And I'm guessing that you can only see questions from yourselves, right? You're not able to see questions from each other? Nope. All right. Anyway, we have over 100 attendees today, right? It's questions flying everywhere, right? It's very fun, right? Yeah, so don't worry. I can see every one of the questions. I literally have another screen open here, full length, seeing all the questions come through. So no worries. I encourage everyone to send questions. Use it as our main form of communication throughout today's webinar, right? If you've attended the previous webinars, you will know that we have no time, right, to attend to questions usually at the end of the webinar. Today's one is super in-depth. It's going to be the advanced Fibonacci Confluence Strategy. If you were to ask me what is the one strategy that puts together all that we've learned so far, right, in being able to pick very, very strong reversal points, I would say is a Fibonacci Confluence Strategy. My hope, right, is that I'll be able to teach you everything today, right? It combines, usually when I'm doing the other webinars, we'll have one session for Fibonacci retracements, one for extension, one for expansions, one for projections, and one to combine it all. So 5 webinars worth of lessons. I'm going to combine it into one today, right? So we might go pretty fast. I'll do my best to teach. Shoot your questions right away. I'll do my best to answer them along the way, because the thing is, once you miss one of the, while I'm teaching something, if you just miss a concept, it becomes very difficult. To, sorry, just let me tell. It becomes very difficult to, what's the word for it? It becomes very difficult to catch up on it, on what exactly I'm referring to. Okay, so just take note of that. Let me see. I'm just going to share my screen right now. I'm going to share my screen up right now. Just give me a second. Okay, are you all able to see my screen? Just checking with everyone. Everyone able to see my screen? Maybe there's a little bit of a delay between when I'm sharing my screen. All right, I'm getting the responses. All right, cool, cool. Anyway, anyway, perfect, perfect. Thanks. I think there's a little bit of delay between when I ask a question and when you guys receive it. So excuse me when it seems like I'm lagging a bit. Okay, perfect, perfect. Thanks. Nice to hear from you guys. All right. I assume most of you guys attended my previous webinar, or the last, or the first webinar, the second webinar. This is the third webinar of the series, right? I assume you guys attended it. All right. So I will be jumping straight into it. Today's session, Fibonacci Confluence Strategy, right? I'm going to use Canva to present instead because it has really cool writing tools that allows me to draw and annotate. Okay, this is a younger version of myself, right? So as a quick introduction, Desmond Leong, founder and CEO of Rocket, right? Prop firm trader. My team has passed 15 over. I think now it's probably about 20 over prop firm challenges, finalists for best FX and equity research multiple times from the prestigious technical analyst awards. My specialty is technical analysis, right? We used to advise the trading desk of hedge funds, banks like Brevan Howard, Goldman Sachs, right? And we specialize in technical analysis. If you ask me about fundamental analysis, I don't use it that much in trading, right? I feel like it's good to kind of get a know what whether you're risk on or risk off, but my specialty is technical analysis. And if there's anything I can share with you guys is that with technical analysis, you are able to trade the markets, right? And with the right strategy, trade it profitably, right? But the key thing is that in trading, like I've always said, you can learn the right thing and you can learn the wrong thing. That's the amazing thing about trading, right? It's very different from the world of academia where you are given a textbook and what is written in the textbook is correct, and you know that you study it, you know that the questions come out, you know that if you answer it, you're going to get it correct if you answered it based on the textbook. But in trading, it's very different. You can learn from the right people, you can learn from the wrong people, you can watch 100 hours of YouTube videos teaching the wrong stuff, and you end up trading wrongly, right? So in trading, it's very dangerous. And if there's anything that I like to advise, so-called, is to use your discretion when it comes to learning. Just because someone has a microphone, right, and has a YouTube channel and is willing to talk about it, does not necessarily mean he's teaching the right things. All right. For me personally, I like to share with you guys that I have no ulterior motive from sharing this session with you. There will not be, for those of you all who are here for the first time, there will not be a special session at the end where I'll ring a bell and ask you to go buy my course or something. None of that. Okay. Today's session is very generously sponsored by IG, right? I'm a guest speaker here to teach you guys, hold nothing back, teach you guys how to trade, well, right? What is a strategy I've used myself, and of course, I guide you guys how to use it. Now, disclaimer as usual, everything in this webinar is educational in nature. Nothing should be construed as investment or trading advice. So please do your own due diligence before you guys trade. All right? Perfect. Now, moving on. Okay, this is my cert just to prove that I passed one of these funded trader challenges, right? I actually passed in record time. It's pretty fun, right? But being very wary of time, let's begin today's session. The agenda for today, we're going to cover these 5 things. Correct ways, firstly, to draw a Fibonacci. We'll then go on to what are retracements, extensions, expansions, projections. Okay, I'll be teaching you guys what are the difference between all of this. Confluence is when you combine it all together. And when you combine it all together is where you can forecast where the markets are going to reverse. Because the thing about trading Fibonacci, it is one of the few leading indicators in the markets. Moving averages are a little bit slower. right? Stochastic are oscillators, you got channels, you got this and that, right? They're all lagging indicators. One of the very few leading indicators in the market is actually Fibonacci, all right? The problem is that it is one of the toughest things to learn, super duper tough. I've learned it from the best, right? And today's session is where I hope to teach you how to apply it properly. Hopefully, I can. Hopefully, we can go through most of it. Okay. Now, Fibonacci retracement checklist, right? Let me start drawing things out over here for you guys. Oh wow, that's too big. Okay. Okay, let's start drawing things out for you. Okay. Now, the first thing about a Fibonacci retracement checklist is that the four things. Look for ideal market structure. All right. Notice when I draw a Fibonacci retracement, there is this line, right? There's this line that is in the middle that goes all the way down. Okay. You want price to ideally notice how price is kind of going around here, right? It's not deviating too far from the middle, what we call the Fibonacci trend line. Okay, it's not going too far, because when it deviates too far, that's where it's not effective. Okay, if you notice price like going all the way down here, then all the way up here, right? There's too much of a deviation from the trend line. Okay, let me show you a very simple example over here. Okay, if I was looking at this Fibonacci, right, GBP USD, I have a Fibonacci retracement here. So traditional Fibonacci retracement teaches you to pick a swing low and pick a swing high, correct? Pick a swing low and pick a swing high. If I did that over here and I pick a swing low here and I drew it all the way to the swing high over here, notice I have this little trend line in the middle. Now, the trend line is not put there for fun. It's put there for a reason. What a Fibonacci trend line is ideally supposed to do is that it's supposed to follow price as closely as possible. But look at this. Look at this massive movement over here. Notice how far price has deviated from the trend line. This actually weakens the strength of the Fibonacci. Okay, the further price deviates from the trend line, the weaker it becomes. So, first lesson, when you're drawing a Fibonacci retracement, just remember the trend line should follow price as closely as possible. What is a good example of this? This is a good example. If I were to draw this Fibonacci retracement from here all the way down to here. Okay, I'm going to zoom in over here. Oh, sorry. Notice my Fibonacci trend line. I starting point at a swing high over here, and it goes all the way down to a swing low over here. All right, the trend line that follows price is very close, to each other, and this increases the strength of the Fibonacci. Okay, that is the first rule that you want to do. The closer it is, the better. If you know the concept of harmonics, right? If you know the concept of harmonics, for a bonus lesson for those of you all here, if you understand, where's my harmonics? Are you harmonics? No, no, no. Yeah, if you understand the concept of harmonics, right? You're always trying to draw these little patterns. It's a bat, it's a shark, it's a butterfly, all these different patterns. The key thing that you want to do, right? This will improve the way you use harmonics too, because harmonics actually based off Fibonacci. But what you're looking for is you're looking for price to follow these little patterns very well. Harmonics is actually a combination of Fibonacci extensions, right? Fibonacci projections, Fibonacci expansions, And of course, if in some way Fibonacci retracements too. But yeah, usually Fibonacci retracements, it needs to draw from a bigger, the first leg needs to be bigger. I don't want to confuse you all too much about it first. I'm not sure if this recording will be sent, but it's just, yeah, I'm not sure if it's recorded, but yeah, best for you guys to watch today's session. All right, you need to check with IG if this session will be recorded and sent. To my knowledge, it might not be. Okay, now so back to this. Right? The concept of Fibonacci. Just remember that when you're drawing a Fibonacci, ideally the trend line needs to be close to price, right? Look how nicely it worked out over here. But starting point over here, it comes up to here, comes down to the 23% Fibonacci, touches this level, bounces up. Perfecto. All right. But of course, trading Fibonacci retracements by itself, let me tell you, it will not work. You need a combination of retracements, extensions, confluence, support and resistance, momentum, knowing how to use oscillators, knowing how to use correlation, which I covered in the previous session. But confluence by itself is a very, very strong trading strategy. I've passed trading challenges, right? Those prop firm challenges just by using confluence and support and resistance. Okay, now back to the topic. How do I erase? No, maybe I don't need to erase. The first thing that we want to do is look for to avoid insignificant swings. I taught you guys this previously, right? But the key thing is, when you're drawing Fibonacci, look for these significant swings. When I say significant swings, I mean this like big levels, right? These big levels. Don't look for the little ones in between. Okay, look for the big levels. This is another example of insignificant swings. If you're asking me to draw Fibonacci over here, is very difficult because the swings are so insignificant, right? And avoid the wicks, avoid the super duper long wicks as possible, as much as possible. Okay. Now let me show you what I mean by unclear market structure. When this usually happens on the more exotic time frames, lower time frames. If you look at this, it's very difficult to trade. It's very difficult to pick a starting point and an ending point when it comes to trading. Where do you find this? Very simple. You go to something like a dollar ZAR, or something, right? Go into the lower time frames. Look at this, right? Even the 1 minute time frames, right? This kind of market structure, impossible to draw a Fibonacci retracement, right? Very, very difficult to draw a Fibonacci retracement, right? Very difficult to draw a Fibonacci retracement from here to here because you don't know if this swing low is the real swing low because different brokers have different price feeds, right? So if you're drawing a Fibonacci retracement that ends over here, right? It might not be the same level across different brokers. So that is one thing I want to teach you because for swing highs and swing lows, the key thing is about picking correct. For Fibonacci is about picking the correct swing high and swing low. Just to give you an example, right, of what I mean. Maybe we can use an example over here. An example. This swing low. This swing low is 17.9148. Okay. For the sake of my terrible memory, I'll be posting it here 17.9148. Okay, 17.9148 for dollar ZAR. Maybe I add in another dollar ZAR across a different broker, right? Maybe it's a new pane, right? So they would have this value here too. Yeah, so this is 17.92, right? If you look at the value over here, right? This swing low on another broker is 17.92. This one is 17.91. Notice the difference in prices, in swing low prices. So if you were to, this is just one example. Of course, we can go back and we find different levels. Notice for this area over here, Look at the different in movements. This one has a clearer movement, like this. This one is just chaos, right? So when it comes to trading Fibonacci retracements, it actually works more effectively when you trade on the higher time frame. Definitely, because on the lower time frame is messy, but if you look on the higher time frame, it actually looks pretty similar, right? It actually looks pretty similar because the higher time frame filters out the noise. Higher time frame is one. It helps your Fibonacci retracements be more effective. Lowest I will go for Fibonacci retracements is the 1 hour time frame. Okay, it tends to work better that way, right? 15 minutes, 5 minutes is just pure chaos. Okay, next thing, use instruments that are a little bit more traded, right? Not the exotic instruments. Okay, so those are some of the things that I'll be letting you know first. Back to here. Okay, significant swings, these are the ones that we want to look out for because that is where we're going to use our Fibonacci retracements. This is another example of significant swings. You notice the levels are so nice, right? Very nice. Big reversals, big reversals, big reversals. Very easy for me to pick clear levels to draw my Fibonacci from. Okay. Now, moving on from here. This is another example of very clear market structure, which I like. Um, okay, and this one I cover on the let me just, oh, I can't pause this. Can I pause this? This one I covered in my previous what I shared, where your Fibonacci trend line should ideally follow price structure as closely as possible. I covered this just now, so this is just a recap on it, right? So look at it. You want your Fibonacci trend line to follow price as closely as possible. That will ensure that your integrity of your Fibonacci is intact, right? Okay, moving on. Sometimes you can adjust time frames for clearer market structures. On the M15 view, it looks unclear, but on the H1 view, it looks a lot clearer. Okay, let me repeat that. On the lower time frame, things tend to look a little bit messy. On the higher time frame, things look a lot clearer. The reason for that is because on the lower time frames, right, it's just the nature of it. It's affected by the news a lot more. Okay, the lower time frames are affected by what I call known unknowns a lot more. For example, if you look at the non-farm payroll, okay, I shall not deviate too far there. If you look on the non-farm payroll on the 5-minute chart, it looks crazy. The markets are moving like crazy. And in a day, you can have multiple news releases. Okay, you can have multiple news releases that moves the market so much, a lot of weeks here and there, right? Donald Trump says something, Twitter, he tweets something, right? War happening, right? All these little things are volatility that causes the markets to look very messy on the lower time frame. But once you go to the higher time frame, it becomes a lot clearer, right? It filters out a lot of the noise that you see on a day-to-day basis, all right, on an intraday basis. So one thing to do is that at the very basics, the clearer the swing low, the clearer the swing high, the clearer the trend. So naturally, my personal preference is that if you could pick H1 time frame onwards is the ideal way to the ideal time frame to draw Fibonacci. Okay. Now, the different Fibonacci retracements might be worth taking note of over here, but there are many, many Fibonacci retracements that are talked about out there. So I need to watch my throat a bit. There are many, many Fibonacci retracements that are talked about out there. My personal preference is this Fibonacci retracements, right? Now, so something to take note of, right, guys? The concept of Fibonacci retracements is that anything that is between 0 to 100%, this is actually Fibonacci retracements. Now, when you are if this was a swing high and this was a swing low, and price is slowly starting to retrace from 23, 38, 50, 61, 78, and 100%. Once it goes beyond 100%, that is what we call Fibonacci extensions. Okay, Fibonacci extensions. That's where it crosses beyond 100%. Fibonacci expansions over here is when it goes into the negative region. How does that look like? Usually, you have a swing high, you have a swing low, price retraces a bit, and then reverses more. So it looks like the Flash, right? So if you ever watch any movies, the Flash, Thunderbolt, Fibonacci expansions, that's where they come into play. Let me show you a live example on here, right? Let me go into maybe pound dollar. So Fibonacci retracements, I'm going to come to this area over here, make sure it's clean. When I draw, so I will have a swing high and a swing low over here. If I take my Fibonacci retracement, my starting point is over here, and my ending point is over here. Now notice, right? As price is, this is my starting point. This is my ending point. Okay, my starting point, right? My ending point is where the Fibonacci retracement begins. As I slowly work my way up, 23% retracement is when price retraces 23% of this entire movement over here. You notice that 50% retracement, right? 50% retracement is right smack in the middle of the vertical distance, right? If I had a vertical distance from here up to here, this is 144.8. My 50% retracement, is literally uh, half. Can you see that? That's the important thing to take note of. Fibonacci retracements is just like taking divisions, like specific percentages that you are dividing, right? So 50% retracement basically means that you have moved half of this entire move over here. That's what a 50% Fibonacci retracement means. I got a question from Jason. Does the Fibo line only work for chart time frames you draw on? You draw Fibo on H4, is it you only see in the here and trend on the H4 chart? Uh, yes. So very good. Is there a way I can display this? No, I can't display. But okay, Jason asked a question that if I were to draw Fibonacci on H4 time frame, can I use it on the 5-minute chart? You can use it usually one time frame lower. So if you draw on the H4 time frame, you could use it on the 1 hour time frame. But I will not go beyond that. That means if I drew something on the H4 time frame, it's very difficult for me to use it on the 15-minute chart or the 5-minute chart. Okay, I would usually only go one time frame lower, like the 4-hour time frame. That's fine. 1 hour time frame, 4 hours to 1 hour is okay. 1 hour to 15 minutes is okay. 15 minutes to 5 minutes is okay, but not 4 hours to 5 minutes. Okay, that's the rule of thumb for everyone. So this is what Fibonacci retracement is. Now notice I have some nice little Fibonacci retracements all the way up here. This is what I call the Nike tick Fibonacci retracement. It's called Fibonacci extensions. So price basically needs to go all the way down and retrace in a straight line all the way up and come all the way up to touch this level. This is the 127% Fibonacci extension, and very often my personal favorite trading strategy is to play the reversal from the 127 back to the 100%. Okay, and my stop loss tends to be, personally, of course this is not trading advice, it's my own personal trading strategy, my stop loss tends to be slightly above the 138, maybe somewhere over here, and my take profit somewhere over here. Super simple basic strategy. Of course, once you combine Fibonacci confluence, it becomes better. Now maybe we could see that, just a quick example of that. I notice a Nike tick over here, maybe here, all the way to here. You notice little Nike tick coming all the way up to here, react off the 127, come back down to my entry, hit my profit target, and then take off. You'll notice it very, very often, right? This is just one of the tricks that I'll be teaching you guys. I mean, it's not going to happen all the time, right? It usually works better when there's a, like, okay, you can see here it goes to the 138 and come down, so it probably wouldn't have worked out. But this is where Fibonacci confluence comes into action. Now, I have showed you, I mean, there's so many examples of it, right? For those of you all who are interested, right? Yeah, 127 entry, come down, right? 138. There are a lot of instances of it. Okay, I want to try to find a Fibonacci expansion example for you. Okay, Fibonacci expansion is like what I said, it looks like the flash. You want to look for something like the flash. Okay, like this. This looks like a nice little zigzag over here. Okay, so if I were to draw a Fibonacci expansion, the rule of thumb is starting point, ending point, right? Price needs to minimally reverse at least 50% of the original Fibonacci retracement. You see, price has retraced between 50 and 100. It cannot go beyond 100. Okay, so you can see here, price comes down, it retraces at least 50. It actually retraces all the way to 78, and then it comes all the way down. It bounced once off our first negative 27, perfect, and it bounced once off the negative 61.8. Is it coincidence? It's a coincidence, but this is how Fibonacci retracement, Fibonacci expansions work. By itself is weak, right? By itself, this Fibonacci expansion might not be the strongest, but I could have combined it with maybe a larger Fibonacci retracement. So notice that I have the 38% retracement here that line up with my negative 61.8. I could have combined it with a Fibonacci projection over here, and we might have noticed that the 100% Fibonacci projection lined up with the negative 27. My minimally two. You need at least two Fibonacci lining up to set yourself up for a decent enough okay trade, right? Decent enough okay trade. Now, back to, sorry, I think that I some of my followers asking for the link to join today's webinar, which I have. Is it the link? Yeah. Yeah, this link here. Okay, no problem. Okay, I just sorry. Yeah, some of my followers are asking for the link. Now back to this. Okay, back to this. Next slide. Oops. Got another question. Does that mean 5-minute chart no Fibo to use since Fibo can be drawn 5-minute, 15-minute chart, 5-minute charts need to refer to 15-minute chart? You can only draw Fibo. Yeah, my personal preference, Jason, right, is that I will only draw Fibonacci on the 4-hour charts or 1-hour charts, right? And anything above 1-hour charts, right? I will try to stick away from the 1 minute and the 5-minute. 15 minutes kind of I don't really like 15 minutes, right? My personal preference, focus on the 1 hour, 4 hours. Okay. Now, okay, this was a part where I explained the different Fibonacci retracements. I covered it just now. Same thing, what you want to look out for Fibonacci retracements. A question that I always get. Is that look at all this Fibonacci retracement. We got a 78, we got a 61, we got the 23, 38, 50. Which one is stronger? Right? Everyone say, is the golden ratio the strongest? Right? I get a question a lot. Is the golden ratio the strongest? Like this gold one over here, is it the strongest Fibonacci retracement I should watch out for? My simple answer to that is that no, there is no strongest Fibonacci retracement. One retracement will not be stronger than the other retracement, right? A lot of people are trying to look for this magic bullet to think that one Fibonacci retracement is better than the other. Okay, the truth of the matter is they're all the same. The key thing is how well a particular Fibonacci lines up in terms of confluence with others. Okay, if I were to pick the weakest Fibonacci retracement, I would say 23% retracement is probably the weakest, because you usually need to price needs to break a 23% Fibonacci retracement to confirm a bigger retracement. Okay, very confusing. Let me explain again. Okay, let me see. Now, when I draw a big Fibonacci retracement here, okay, maybe notice I have a starting point over here, I have an ending point over here. Price, I treat 23% retracement as what I call the confirmation retracement. Only when price breaks the 23% retracement, then it becomes valid, where it can actually, I will start to look out for the 38% retracement over here, right? Because only when it breaks the 23, then I would consider 28, the 38. 23% retracement is one I don't trade. Personally, I don't trade it unless it is from a bigger time frame as a confirmation, right? But personally, when I'm using it just to trade, 22% is one I stay away from. Okay, as in I don't generate a trading idea or like a trading setup from a 23% retracement. All right. Um, Abhishek is asking, if everyone follows the same strategy, how does trading work? Well, the interesting thing is, right, not everyone follows the same trading strategy. There's 101 different trading strategies out there, and especially when it comes to Fibonacci, is one of the toughest trading strategies. I've taught this to a lot of people, and very few people can master it, right? It's very advanced. A lot of people draw it wrongly, right? A lot of people don't know how to combine Fibonacci confluence, right? And people don't know proper trade management. Fibonacci confluence is one thing. It's very difficult to find someone who draws the same Fibonacci retracement, the same Fibonacci extension, same expansion, same projection, same supporter, same interpretation of support and resistance, same interpretation of momentum, same interpretation of trend lines, same interpretation of using correlation and deciding to take the same entry, stop loss, and take profit. Almost 11 different variables just to decide a particular trading strategy, and you throw in whether they're trading on the higher time frame or the lower time frame. Very, very difficult for everyone to trade the same strategy, Abhishek. I hope that answers your question. Now, back to this. Right, where am I? So notice the 38% retracement bounced very nicely here. But one thing I want to highlight to you guys is that even before that, you notice that there is a nice support area over here, right? Remember in my previous session, I said look for the multi swing levels, multi swing highs, the pullback support. Price react strongly one time from here. Price react strongly one time from here. Price fighting over here. It finally breaks out. It's making a pullback to this level, and this level happens to coincide with a 38% Fibonacci retracement, right? So you got pullback support, you got 38% Fibonacci retracement, you got general, bullish trend, and you play the bounce up to the most recent high. That is an idea behind this trading strategy. Okay, that's the important thing to take note of. I mean, I'm showing this to you live on a live chart, right? But when in trading, it's going to be a lot tougher. You start second guessing yourself, right? So that's where I'll show you how you can combine this Fibonacci later as much as possible. Okay, a question from Clinton Nyenga. What time frames do you scalp the Nike tick strategy? Which pairs does this strategy work? So the Nike tick strategy, right? As I showed people over here, let me see. This example, Nike Tick, I bet it works. Bam, look at that, man. Reverse Nike Tick, right? Ups, comes all the way down, touch the 127% retracement, bounce up. Your stop loss here, you take profit over here. Easy trade, right? I think it happened to have lined up with a larger Fibonacci retracement, possibly. Yeah, lined up close to a 61.8 retracement. Okay, without deviating too much. What time frame I use for Nike Tick strategy? I usually do the 1 hour and a 4 hour time frame, right? Now the reason for that, let's see. Let's see the reason for that. I need to teach you this concept, right? I need to teach you this concept of known unknowns. Okay, I need to teach you this concept of known unknowns, where you know something, you know a news event is coming, but you don't know the outcome. Okay, and that causes a lot of volatility. Let me try to find an example over here. Now, on the first Friday of every month, we will have this little thing called the non-farm payroll. Okay, let me find it. I'm gonna guess it's the non-farm payroll, probably somewhere around here, right? I'm going to go to my events. Mr. Non-farm payroll, bam, over here. Okay, or rather over here. Non-farm payroll on the 1 hour chart looks like any other bar, right? Maybe a little bit big. Let's look at the non-farm payroll on the 5-minute chart. Now, where can it be? Look at that. This is non-farm payroll when right about over here, right? This is when non-farm payroll is. Look at the volatility, right? Look at the volatility of non-farm payroll. Massive candle, super duper big. You're looking at this, you're scared, right? And we go into the 1 minute time frame. Oops, sorry. Ay, 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 ay. Where's the super big circle I did? Here. Non-farm payroll on the 1 minute time frame. It looks crazy, right? Look at that. Look at the non-farm payroll over here. Massive movement. If you were trading, a little Nike Tick strategy, right over here, trying to take a trade here, you'll get whipped out and gone, right? No chance, right? No chance. You have the best trading setup, but the amount of volatility that it can cause you, right? It can blow you out of the trade. This is crazy on the 1 minute time frame. But if you are trading on the 4 hour time frame, all right, if you go to the 4 hour time frame and you look at this little thing over here, like, what is this little speck of dust over here? This candle over here, what is this, a non-farm payroll? Right about over here. Look at it. It's nothing on the 4 hour time frame. So the thing about a higher time frame is that the markets move a lot slower. It's a little bit more boring, not as exciting as a 5 minute like gunslinging kind of a excitement you get seeing new patterns form in the markets, right? But it is safer. It protects you against the day-to-day volatility of all the crazy news events, right? That can shake up the market. Non-farm payroll, you know it's coming, but you don't know the outcome. CPI, interest rate announcements, right? Fed talks, right? All of this, you know it's coming. It's going to shake out the market. If your trade happens to be there, bam, you get whipped out. You're like, oh man, I got whipped out of that trade. Feels terrible. But why did it happen? Because you know it's on the lower time frame. If it's on the higher time frame, you protect yourself against it. It's a little bit more boring, but it is safer and it is more predictable, right? For any trading strategy to work well, is about mathematically, from a probabilistic point of view, you have an edge over the market. You can have the edge assuming no wild anomalies come in that mess up your trading strategy. What are those wild anomalies? Very simple. Forex economic calendar. Bam, go to Forex Factory. These are the big BOJ, high impact news events, high impact news events, high impact news events, unemployment claims, all of this, even some of the medium impact ones, these are the known unknowns. You know the time is going to come, but you don't know the outcome. So if you happen to be trading on the smaller time frame, it can cause you to be whipped out. Okay, so that's why personally for me, lesson to learn for everyone is that stick to the higher time frames. It's a little bit more boring, but it is more predictable, right? You are more immune to the news events that actually come throughout the day. Okay, we got questions come through. If customer wins, does the broker lose money? If customer lose, then brokers win money. Jason, that question is not really relevant to this webinar, but I think what you're looking at is the concept of like A book, B book, right? So yes, in the B book broker, yes, A book broker they make from commissions. Okay, so that level can be considered as a key level. Yes, Herman. Which one is better for forecasting fib extensions or pivot levels? Fib extensions, Abhishek. Mavis is asking, please show an example of Fibonacci Confluence. Sure, I'll show you in a bit. Higher time frames means what time frame? H1, yes. H1 onwards is what I consider as the higher time frame. Let me make sure I covered the other parts of the webinar too. Oh man, look at it. We're almost out of time. Okay. Now, I want to first touch on the concept of invalid Fibonacci retracement. Okay, usually we have a nice little swing high over here, a nice little swing low. Okay, this Fibonacci retracement becomes invalid when price is going, and it crosses below 0%. That is when your Fibonacci retracement becomes invalid, because some people, what they do is that it comes down to here, then it retraces back up to 61.8, for example, and they think that they should take a trade. They're like, oh, it's a 61.8 retracement, it's a nice pullback resistance, maybe I'll take a trade over here. That is wrong, because the moment price breaks this little swing low over here, right, your Fibonacci retracement is not valid anymore. Okay, your Fibonacci retracement is not valid. It is valid if right, it's valid if losing my voice. It's valid if price makes a movement down and it comes minimally. Remember, the rule of Fibonacci expansions is to find it needs to cross the 50% Fibonacci retracement. If price comes all the way up to here, and then it start reversing down like that, and it comes down, you can still use this for your Fibonacci expansion. Okay, you can still use it for your Fibonacci expansion, but you cannot use it for your Fibonacci retracement anymore. Okay, so Fibonacci retracement becomes invalid when price breaks your ending point. It breaks your 0%. It goes beyond your 0%, becomes invalid. Okay, another thing that I want to let you guys know, right, on what makes a Fibonacci retracement invalid, right, is that if price comes down here, it comes up, and it retraces very nicely off the 38%. It comes down here, and then it comes up again, comes down, and it comes up, right? It's a little bit less effective in this case. It's a little bit less effective. It's not invalid, but it's a little bit less effective when it reverses off one already, then it comes up again, then it comes up again. It's a little bit less effective. The most effective one is this movement over here. The reason for that is partly because of harmonics, right? There'll be the people who are trading this little harmonic pattern down here, right? You notice this harmonic pattern, right? Who will take the trade off here, right? It's very unlikely for a harmonic pattern to be valid like this, right? Like this harmonic pattern that comes all the way to here, right? So the effectiveness of a Fibonacci retracement, blah, 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 right? This is very, very technical, right? The effectiveness of a Fibonacci retracement is more valid in what I call the first leg of its retracement. This is the most effective because you got the Fibonacci retracement traders and you got the people using harmonics who are actually eyeing this key level, to take the harmonic. Maybe like this is this is a deep shark pattern or something, right? To take the reversal off here. Okay, it's not that the the levels up here are not effective, but it is less effective if this trade happens already and then it comes back up to here. Something to take note. Very advanced. If you're still following me, you're doing great. All right, this is a very advanced topic. But what I want to share with you guys, of course, gold is volatile. Uh, Yes, you can, Clinton, you can. Now, I will show you some examples of maybe finding. Let's look for a setup together. Okay. So I almost trade almost exclusively on pending orders because that allows me to be a little bit ahead of time. So this is the way I would analyze the charts. Let me see. I would first start with my little Nike tick. I then notice my Nike tick Fibonacci retracement, the 127% Fibonacci retracement lines up very nicely with this little swing high over here. Lo and behold, okay, I would technically consider this as condition met in a nice little trade I want to take. So I would come down here, I'll do 127138, okay? So I would then highlight this level over here. Bam, I love this level. I'm going to watch out for this level for my trade. Next thing I'm going to do, Fibonacci expansion. My starting point here, my ending point. Okay, Fibonacci expansion, go all fibs again. There we go. Negative 27% Fibonacci expansion lines up with my 127%, which lines up with my swing high resistance. Perfecto. Now, how do I get this one negative 27? Let me show you. Okay, my starting point was over here. I have a nice little upward movement to over here. What is the rule for Fibonacci expansion? Price needs to retrace at least 50%, but not more than 100%. This is my 100%, right? So it retraces and it comes up. Remember, I'm saying look for the thunderbolt design. Okay, this looks like a nice little thunderbolt and it's coming up to here. So price is still over here. I need it to work itself all the way up to here. If it works itself all the way up to here, I can then take the trade, right? I would have set my pending order over here. Like this over here would be my own like resistance. Like this would be my first resistance as my pending order entry. Again, guys, this is not trading advice, not trading recommendation. So please exercise your own due discretion. All right. This, I would put my stop loss, above the next big resistance here. And of course my take profit in this case, instead of putting it right over here, I'll offset it a bit, give it, I don't put it right at the where it broke out from. Remember, take profit always before, and my support level would be over here. I'll be looking to play the reversal. If price comes up to here, pending order field, reverse down to here, that is where I'm looking to get out, right? I have one Fibonacci retracement, expansion, Fibonacci extension, swing high resistance, check, check, check. Fulfills the criteria of one trade. Okay. Um, how do we avoid Donald Trump speaking? Impossible. That guy just talks whenever he wants. Okay. Maybe don't trade during the US hours when he's talking more, right? You need to track when he's sleeping, right? But even when he talks, right, it tends to affect the lower time frames more because volatility on the lower time frames is one thing. On the higher time frames is where you are a little bit more immune. 1 hour, 4 hour charts. Let me find another example. So we got dollar yen over there. Hmm. So I usually start by drawing some. My charts usually will look like this. 50% over here. What about the Fibonacci projection? Bam. 3 points for Fibonacci projection. 100% is over there. Maybe I'll look at 78 and 100. About over here. Nope, no trade on here. Let me check Aussie dollar. Wow, look at Aussie dollar. It is messy. Very, very hard to trade. A lot of range. I'll stay out of it. Kiwi dollar. Wow, a lot of range. I will probably stay out of it, right? Maybe gotta go crude oil. Crude oil, very, very messy. Stay out of it. Gold. Gold, 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 gold. Man, this trade worked out so nicely. Did it reverse off a Nike tick? There you go. 127% with a swing high resistance. Right? Yeah, seems to have some movement over here. Nothing on gold so far. I would then go on to the this. I always my first criteria is I kind of try to look out for this little Nike tick because it's the easiest pattern to kind of look out for. Okay, so if I notice this thing here, that's where I start beginning to draw my little Fibonacci extension, right? Okay, 127 down here. Could it potentially line up with another Fibonacci expansion? I'm noticing something line up. Could it line up with a Fibonacci projection? Nope, it's a little bit far away. But this level, in terms of a swing low, doesn't look like a nice level over here. I might have a low probability trade purely from here just to take a scalping order, right? If price were to come down, scalp it, come back up here. But to decide whether I'm going to take this trade, a lot of it depends on uh, how nice this Fibonacci Nike tick is. All right, if it goes up like that and then it comes down, I'm not taking it, right? Because I'm looking for very clear market structures. Okay, GBP CAD, not really. But what is interesting is this looks very nice. Look at it. Price coming all the way down, coming all the way up, touching the 127, right? Touching the 127 here, coming down to my entry, right? So this would have been one of the trades already. And it happened to have lined up, right, quite nicely with one of the nice little highs over here, right? Yeah, so those are the things that I'll kind of look out for. I guess my clearest entry would probably be on dollar, was it dollar yen that I highlighted earlier? Dollar yen setup over here, right? All right, so yeah, this is how it looks like. Now, guys, I've shared a lot with you. If you're using TradingView, you want to use this Fibonacci retracement, okay? This Fibonacci retracement by itself allows you to see, the retracements, the extensions, and the expansions, okay? That you can get from Fibonacci retracement. There's this other one here where it says trend-based Fib extension. It actually takes 3 points, all right? What do I mean by that? 1 point, 2 point, and need a middle point. 3 levels we use, 61, 78, and 100. Okay, you see how nicely price almost reacted off like 61.8. These are the 3 things that you need to use for Fibonacci projection. Okay, 100% is my favorite when it comes to this kind of Fibonacci projection. Again, maybe we have another session where we'll dive deeper into me explaining every one of these concepts. Live trading session if you guys want, right? To actually go in practicing what we learn together, looking at the charts. That is one way to do it. I'm being very wary and very respectful of time over here. But you can also apply Fibonacci positions for stocks, right? If it's only long positions that you're looking at, then what you want to do is you want to look. That means your bias, if you're trading stocks only, you're only looking for long positions. Is that you're looking to buy on dips? In that case, you're looking to buy on dips, maybe a dollar cost averaging into positions, right? What you want to do is you usually do a you look for if like you look for good buying levels. You always draw a Fibonacci retracement from the bottom to the top, and you look for levels like the 38 and the 50% for price to come down to that level. If it happens to line up with a swing high or swing low, that's where you get in on the position. If you are only forced to trade in one direction, so to speak. Okay, guys. I know today's session is very advanced, right? That's why I will have a poll later, and um, if I could trouble you all, right, to help honestly complete this poll, which I'm going to launch, right? It is also for the feedback that we're collecting from the IG is collecting to see whether is this kind of webinars, is this advanced kind of webinars something you all want, right? Is my presentation okay? Is my style of presentation okay? Is the clarity okay, right? So I would like to trouble everyone to have I'll be going to be launching a poll for you to take a look at, right? You should be able to see it. Please rate today's webinar 1.5. I know it's a little bit rushed, right? But if you can, please share how you found today's webinar. 5 is good. That means you felt like you've learned something, even though it might be a little bit rushed, right? 1 is basically you not finding any value in today's webinar, right? Don't worry if you if you rate 1, I will not hunt you down. I promise you, right? But at least let me know the reason, right? And if you may, whether you rate 5 or 4 or 3, right? At least let me know in the questions, right? What you would like me to improve on. All right. I'm not the best presenter, right? But if I'm always looking for ways to improve. If you felt like I was talking too fast, I drink too much chargy, or or I tend to deviate too much, let me know, and I'll find ways to, of course, improve my presentation. All right. There will not be a live session tomorrow. This might be something we plan for in the future, right? I'm not sure if the recording will be shared. I need to ask the IG team about that. But okay, we got enough of the people voting, right? I will, for the sake of everyone here, I will share the results. We got about 70, about 90, close to 90% who voted 4 or 5 stars. Thank you very much. I'm glad you found it useful, right? I'm glad you found it useful, right? I'll be, and the next few polls which I'll be running, right, is for us to the next one, right, is for you to vote on what is how advanced you want. Do you want beginner, do you want intermediate, or do you want advanced topics? When we're planning future webinars, this is the part where your voice can be heard on, do you want more advanced topics like Fibonacci, correlation, harmonics, Elliott wave, Hurst cycles, trade management? Are you interested in the advanced stuff? Are you interested in the basic stuff, right? You can vote on more than one if you want, right? So if you're new to this, you want me to touch on basics, we can arrange webinars for that. Or if you want the really advanced ones, right? If that only interests you, then just vote for the advanced and the intermediate ones. Okay, that would let me know what we can prepare for you, right, in the webinars, right? Because if it's going to be advanced ones, right, then I'm going to just we'll go ham, on the advanced webinars, right? Thank you very much, Val. I'm glad you find that I am a good teacher, right? Eddie, I know I'm a little bit of a speed reader. I'm sorry, I've been trying to squeeze a little bit too much. If we have more sessions, maybe I can pace it out a little bit better. I I'm glad you learned too, Gregory. Yeah, it's this is probably one of the most advanced topics. So if you can absorb it as a beginner, that's already great. Key chat, right? In advance, we're going to need more sessions to cover because each advanced topic usually is accompanied by like a practice session, right? So you probably split it up into more sessions. Um, yes, Karim, I am, but there'll be another topic, right? I usually combine it across 2 time frames. Now I'm going to end and share results. Looks like most of you, almost 90% of you prefer intermediate and advanced topics, right? And just 32, what is it? A 58% of you actually prefer, yes, actually prefer advanced topics alone. The last poll, which I'll be running, is more from like a frequency, right? What kind of frequency suits you, right? Do you all prefer 1 time a week, 2 times a week, once a month, or 2 times a month, right? So this will give us an idea of like what kind of schedule, when we're planning all these webinars for the future, how frequently is 1 time a week too mentally exhausting for you, or is it just right? Is it 1 time a month too little for you, right? Actually, 2 times a month is, yeah, it's yeah, correct. Okay, so please vote over there, and it'll give us an idea of how frequent you want the webinars, right? And at least I can what's the word for it? I can plan our sessions. If you want to meet every week for sessions, is also okay, right? But okay, seems like most of you guys want to meet every week. All right, perfect. I'm glad you found it useful, Karim. Yes, I know, Raj, right? It's 8:06. I know. I will end this I will end my session so you can get your um let me close the poll. There we go. Okay. Thank you so much for voting, everyone. Most of you voted 1 time a week. I'll share that with the team. And now, last but not least, free prizes for those of you guys who stayed. Okay, it is the best support and resistance for MT4, #1 on Google right now. It helps you find all these. Look, that's me. All these nice little support and resistance indicators. A very very good way to find support and resistance. Right, swing high, swing low, overlap, pullback. Right, multi time frame. I created this indicator. Right, and it usually costs 148 USD. Is given to you for free today as part of the promo that Raphael will be sharing with you in the next slide. I want to thank you all so much for attending today's webinar. I really appreciate it. Thank you for your patience, and thank you for sticking around. I hope to see you guys soon. Please stick around to learn how to get this indicator for free, right? As long as you have an IG account. Thank you very much, everyone. Raphael, over to you.
Thank you so much, Desmond, for that great session, and thank you all for the questions that have come in. And also apologies if you haven't
Yes,
managed to
I
get to
will
your
do
question.
reviews instead of go to webinar. Got it. Raphael, over to you. Got it. Thank you,
Thanks,
everyone.
thanks, Desmond. Yeah, so talking about the great indicator that Desmond has mentioned, so we have this exclusive promotion for all our attendees, and it's really simple to get. So after this webinar today, you'll be receiving an email from us for you to register your interest for this promotion. Within that email, it will also contain the recording for the webinar in case you haven't been able to tune in for the full one. You can watch the full stream on our in the email provided. So, and also for all those viewers on YouTube and Facebook, please kindly reach out to us via email as well if you want to participate in this promotion. So essentially, to receive that free indicator that Desmond has mentioned, you'll need to register your interest in an upcoming email, place a deposit of at least $1,000 after this webinar today, and make one qualifying trade. And for new IG users, we have a little extra gift for you. If you create an account and do the same requirements, you'll also receive $200 worth of Takashimaya vouchers in addition to the MT4 indicator. So from today until 27th of June, as long as you fulfill this criteria, you'll receive these exclusive rewards. In addition to that, we still also have the welcome bonus for new to IG users. Simply fund account with the same $1,000 and trade CFDs during your welcome period, and you'll receive up to $2,000, $2,088 in welcome bonuses across your trading journey. So another big welcome bonus for you in case you're not with IG yet. And last but not least, also want to thank everyone for sticking around for this session. And if you could drop any feedback you have in our feedback form in addition to the ones you've kindly given in the poll, that'll be greatly appreciated. We'll love to get more feedback from you on how we can plan future sessions, maybe more sessions with Desmond. Just let us know in this feedback form. Thank you so much. We'll leave these on for a couple of minutes, and once you've filled in the form, have a great evening.